Good afternoon, everyone. My name is Maha Mohammed. I'm a PhD student at level 2. The presentation relates to digital assets regulation, which is the primary theme of my PhD research. I selected this topic because the digital asset regulation is already a hot topic. It's no longer a niche topic for the geeks. It's even started to slip into the public discourse. Since the birth of Bitcoin, digital assets have attracted a flurry of interest by researchers and policymakers. So the idea of disintermediation and decentralization appealed to many investors, so money started to flow into the market. This has contributed to increasing the market complexity, posing great challenges to policymakers in terms of threats to financial stability, investor protections, and market integrity. So the regulators had some imperatives that they need to deal with. They need to revise their regulatory approaches. Here I provide you with some statistics showing the growth in the digital asset market. You can see that the market started to grow in 2020-21, and then you note a decline in 2022. This is the period where crypto winter happened. We saw a collapse of major crypto exchanges like FTX, Celius, and BlockFi. And then the market started to pick up in 2024 and 2025. The same thing goes for the assets that are under management by a lot of financial institutions around the world. But if you look at the proprietary positions held by banks, it is still at a modest level. An important question that needs to be answered by regulators around the world is, when it comes to digital assets, what kind of activities that they are pertaining to. So in this diagram, I present you with a host of activities ranging from wallet management services, custodial services, exchange, and of course, digital asset lending and borrowing activities in addition to leverage. The question is, are these activities all regulated right now by different regulatory jurisdictions? The answer is no. If you look at the regulatory regime, for example, in the GCC, in the UK, and in the United States, it's mostly focused on wallet management, exchange, and trading activities. But when it comes to other activities like, for example, data analytics, it is slightly fell out of the radar. It is not yet regulated. If you look at, for example, digital asset lending and borrowing activities, again, this is not regulated. Okay, when it comes to the risk landscape in relation to digital asset, you would see that we have a lot of commonality when it comes to risk terminologies. You will see technological risk is there, operational risk is there, financial risk, and compliance risk. But if you look at the technical feature of the digital asset, it is quite complicated. So the question is, do we use our existing regulatory regimes in order to regulate the digital asset market? The question is not really, because the digital asset as a landscape, as a technical system, it is totally different from the traditional financial system. So in the asset layers, this is where the digital asset will exist. So the question, do we regulate the digital asset itself? They are basically a set of algorithmic code. So the regulation would be impossible using our traditional, regulatory regime. So we need to move to something else. Do we regulate the activities that are associated with digital assets? And by the term activities, I mean the service providers. For example, do we need to regulate crypto exchange, for example, businesses? Yes. Do we need to regulate the crypto lending activity? The answer would be definitely yes. And the same thing goes to asset management. Another problem that is facing regulators around the world is the decentralization as a concept. We are dealing with a spectrum. The decentralization can be centralized. It has some centralization dimension, so you will be dealing with centralized exchanges. Under centralized exchanges, you will have companies that are responsible for the custody of investor funds, so you have investor protection issues. If you are talking about decentralized exchanges, there will not be, an institution. It's physical firms. There will be no board, no management. You will be dealing basically with a platform. So shall we change our regulatory system in order to move from entity-based regulations to platform-based regulation? Again, this is an interesting questions to be answered. Okay, one of the main findings that I came across while conducting my literature review is the divergent definitions of digital assets. If we review the publications made on digital assets by policymakers and even academic researchers, you will find that there is a discrepancy in the way they view digital asset. For instance, the digital assets by, let's say, in the SEC, they view it as a security token. If you look at the definition adopted by the FTC, the Commodity Trading Commission in the United States, they view cryptocurrencies as just a commodity. So again, the way you regulate a commodity would be different from the way you regulate a security token. So in order to solve this dilemma a bit, some international sitting bodies came up with a unified definition that caters to the technical feature of digital assets and cryptocurrencies. So when you talk about digital asset, the regulation need to cater to an instrument that exists in a digital form. So you will be working with a digital token, and the digital token will not exist in vacuum. You will be dealing with a distributed ledger technology infrastructure. And of course, the digital token should be protected with some cryptographic controls. So as a result of having this divergence and discrepancies in the way we view digital asset, you will find a lot of regulatory publications being made in different jurisdictions, and instead of reaping the benefit of decentralization and disintermediations, we are moving toward over-regulation. In terms of regulatory responses, the regulatory responses ranged from blanket bans, and we saw that in countries like China and Russia. In fact, China did not want to appear as a laggard, technologically speaking, so they are currently considering the creation of their own cryptocurrency. They call it the central bank digital currencies. When it comes to containments, countries like Japan, they opted to engage in the crypto system. They are allowing a lot of companies and exchanges in order to operate in their jurisdictions. However, they are restricting the cryptocurrency companies or any other types of crypto business model from having a direct interactions with the traditional financial system. So this leads us to a containment. And when it comes to regulation, this is the most common response. We saw that regulators in the United States have passed recently a regulation concerning ICOs, initial coin offerings. Now recently also they have introduced something related to the stable coin, and this is the approach that the regulators in the GCC have adopted. When it comes to the primary theme of the regulatory approaches taken by many international sitting bodies, their approach revolves around two main aspects. The first one is to have an overboard application of existing regulations to digital assets and including cryptocurrencies, or to come up with a new set of a regulatory regime that caters to the specific risk and the technical features of digital assets. And in addition to that, regulators around the world, they are trying to deal with the current economic situation, and therefore they are contemplating having a policy choice between something that relates to project construction of activities or something that can enable economic growth and innovation. If you look at the regulatory components, usually the regulatory components will include of regulation, which is basically a text of the rules that the licensees or financial institutions around the world need to comply. This relates to licensing, business conduct, capital and risk issues. Also, you will have a pillar related to supervision and oversight. And as my colleague mentioned, I believe Hamad earlier, you will see that there is a trend towards sandbox testing and toward having a trade-off between direct supervision and indirect supervision. And at the end, you have data reporting in order to fulfill the usual regulatory mandate or the supervisory mandate. This graph shows the maturity level when it comes to data collection across different types of crypto activities. You will see the group level data is the lowest one because as Hamad mentioned in his presentation, that currently we don't have a unified international system that deals with systemic risk. So group level data tends to be a scarce resource. Despite the regulatory endeavors and initiatives taken over the past 10 years, we still have some gaps and loopholes in the regulatory system. Things, as I mentioned earlier, like NFT, digital asset leverage and lending activities, it is still missing from the regulatory frameworks. And this provides an agenda for future research direction. What are the risks from having discrepant regulatory practices? This will give rise to arbitrage opportunities, fragmented oversight, and systemic threats. In order to tackle the problem related to cross-border cooperation, because many of the existing digital assets and related platforms, they are borderless, so you need some form of coordination mechanism across the different jurisdictions. Currently, some sporadic efforts are taking place in the forms of having supervisory colleges and MOUs, but more work has to be done. And this is my last slide actually. Here I'm just putting some recommendations for policymakers to take into consideration. For example, investor protection is a hot topic, and a lot of the existing regulations have some prominent gap in that respect. Crisis preparedness. Right now, we don't have any macro-prudential policies that can deal with any upcoming crisis involving crypto asset financial institutions. So that's it.